Good evening, all. Ira Epstein of Linn Associates with your financial market wrap-up for a pretty crazy trading day on this Thursday, the 30th of September, 2021. We're about 6:50 p.m. Central Time. So, about an hour ago now or so, President Biden did sign the bill that he got from both the Senate and the House to extend where the government stays open to, I think it's December 2nd. Debt ceiling has yet to be discussed. That's not been decided on. And we know that's going to be a very serious issue. And then in the House of Representatives, Wonder Woman, Nancy Pelosi, is on the phone. Are you going to vote with me? Can we count on you? Well, she's going through all that right now, trying to see, can she get the vote that she thought she could bring today to the floor to get passage of at least the infrastructure bill. I don't see why, if I were a progressive, I'm going to do that. Because I'm just listening to Joe Manchin say, now today even gave a number. He's thinking that reconstruction bill should be $1.5 billion. Now, admittedly, he's a senator and Nancy's in the House. But if I've got my vote, if I vote as a progressive in the House and agree with Nancy, how do I get anything going, and what leverage do I have over the Senate? I don't think much. This does not mean I'm right. I am not Wonder Woman. I'm not even a Superman. I'm just watching, and I'm amazed at it all. We'll see. If she calls the vote, she's got the vote. If she allows the bill to go to the floor for a vote, she's going to win. She's bright. She knows how to do that. If she holds it back, she doesn't have the votes. Could it be simpler? She's not going to get a failure. She's just not maybe able to bring it to the floor. We looked at today, and you've got to be nervous as to what's going on in China. In China, copper prices are falling. That is not good. We're going to have more supply chain issues. Just think of it that way. How much do we get from China? These factories need energy to run. They're telling you day in and day out they don't have enough energy. They're calling on OPEC to give them more. OPEC has a meeting coming up, and we have to pay attention. Can the market run with that, or is it going to back off on it? It's going to be a pretty interesting couple of days here because OPEC has to make a decision. Right now, we know that they're talking in October of giving another 400,000 barrels a day. They could easily go to 800,000. What'll it do with the pricing? I can't begin to tell you. I don't know. So as we take a look at the market on the S&P, you are under the 18-week moving average of closes. You were down 3% for the week. It feels so much bigger of a loss, but 3% now. Last week, you were down 0.42, so that's 3.5%. The week before, you were up a little. It's not a 5% break. This market's having trouble giving you another big break that it can hold on to. I'm not saying it can't happen, but you're through the biggest downdraft month, period. It's over. Typically, October is volatile. It's this. We've had October crashes. Remember the old flash crashes, if you're old enough to? Most of the kids today have no idea what that means. But it's back and forth as the market goes. I expect to see more of that. What about the market? Well, if we take a look, you have a pattern of right now, lower highs, lower lows. You entered a downtrend. Up until this, you had a higher high, lower low. You had a huge decline day today, and you're getting a bounce. You're in a downtrend again. You're down to the 100-day average, and the market has found support there. Now, I hear all the time the technicians on TV say, well, if you go back to the 100-day average after you've recently hit it, it's generally a sign of a lot of weakness. I'm not in that camp. Just that simple, not in that camp. I think you look at where the Bollinger Band is, and the combination of that is what I watch. Can you keep dropping here? Yeah. I don't think you're going to stay under the Bollinger Band, and you're not. You fell to it today. Today. What do you think I did as an SOS signal to my subscribers? This is where you come out of shorts. Everybody's panicking. You should be covering. Why? Because as we take a look, you're not embedded. You're not embedded. You had gone back recently after hitting the Bollinger Band to the neutral number, the first break back I don't care what it does. It can drop another 500 points. That's the high percentage play, period. In the NASDAQ, down, and this is where the market first hit that number here. So this is all gravy that the traders are getting, and I do see it's falling further. It doesn't matter to me. I watch. What's the first time that the market's hit the 100-day average? It hasn't, so it's making its attempt to do it now. That's a pretty strong combination. Again, the high percentage money probably came out of this trade already. In the Dow, you haven't hit the lower Bollinger Band, or did you? 33,709 and a fraction, 33,688. What do you think when I had my dive? Come out of shorts. That was the high percentage play today. Don't care what it does from there. Trend down, target hit. You had your bearish crossover. Remember, we've been talking about this. Would you get the 18-day average to cross under the 100? You did. The charts are ugly, no question about it. But the high percentage money's been made. That doesn't mean you can't keep falling. This is one heck of a drop. Getting a 500-point drop is not an easy task. In the Russell, you went down to the 200-day average. You're caught. It's so easy to see it. You're caught between the 18 and the 100-day average. You fell down today to the 200. You're trying to hold that. The trend reverted back to the downside. Momentum's down, but the big number is the lower Bollinger Band. It's not the 200-day. Could that prove to be the support? Of course it could. But that's what the percentage play is. If you take out the highs of today, Thursday, then you don't want to be short anymore, is the way I read it. In the VIX cash, you just missed hitting the key numbers of 2041, the 18-day average. That was the downside target, I think, for those short. Doesn't mean that they have a lost cause here, but they missed it by, 19 points? That's a pretty good call. You were oversold as can be earlier, but you're not now. We'll see. The trend is up. Resistance, again, the upper Bollinger Band. Then the 30-year bonds. The market has been in a free fall ever since tapering coming, and the market just took that to mean that interest rates have to run. Well, first of all, I don't know the tapering's coming. Did you look at today's jobless claims? What's going on there? I would have thought with the $300 a week ending everywhere in America that we'd have saw people coming and getting off the unemployment roll and looking for jobs, not going fresh on. They went fresh on. I truly don't get it. And the market, I think, is caught. It can't quite figure it out. But you certainly have a top in place. This whole area, to me, is a top. When you rally, I expect to see good selling in there, but this is a very oversold condition. The same in the 10-year note. You were 4 days in a row under the Bollinger Band. Let's just take a look right through here. This was Tuesday. You had 1, 2, 3, 4 days under. You came back yesterday, closed right on the Bollinger Band. Today you're trying to lift yourself a little bit from it. That's typical as to what the market does. In the dollar index, only suckers buy over an upper Bollinger Band. And I know you'll say, Ira, you don't know what you're talking about. I'll give you that. I would never tell a client of mine to buy over a Bollinger Band. This is now the Gorilla Glue trade. It's powerful. It's when the market locks onto the Bollinger Band and doesn't walk away from it. And what it does is it drags the momentum and changes it. It moves from being overbought into locking in, called embedded. And when that happens, until the red line closes under 80, guess what? The pros will step in, and I contend they'll buy the breaks. I teach this in my charting course. I prove it in the charting course. But when the red line closes under 80, if it closes a lot under it first day, you got to be out. But if it's just at a 79 or not, it can only get it back the next day when it reopens, like in the evening right now. And if it doesn't, well, then it stays lost and the odds favor you going back to the key moving average. You're not doing that here. What are you doing in the euro? Well, 40% of the dollar index is the euro. So it's married itself the opposite way with an embedded reading. Rallies in this market until that red line gets over a 21 reading on a close. I contend it'll continue to be sold. In Britain, they're getting the embedded reading, bearish there. The dollar's just trashing every currency against it. How can you imagine being long like the emerging markets? I can't even think about it. Bitcoin did a nice job. It did hold the 100-day average. It began that process back here, and it's been doing it in an oversold market. While the trend is down, it's too oversold. I think the pros are not playing on the short side. I think they're out right now. In the Brent versus WTI crude, you can see how you're up here at almost a new high difference between the two in recent times. You can see that the market is flirting, trying to hold on to that embedded reading. I can tell you that right now. It's right there. Until it's lost, it isn't lost. In November, WTI, if you take a look at this, during the day, I'll tell you, it has been such a bad month that today I told my clients last night, actually, that I wanted them to buy this market on a break, and they bought it beautifully on this. And by the end of the day, I said, it's time we just, if you have a winner, grab it. I said, it has nothing to do with the chart action continuing bullish. I'll play it. I'm tired of such an ugly September. And I stopped for my subscribers. I told them not to trade for almost a 2-week period. I have all the records. I can prove it. It was just, I saw it. It said it's too difficult. You're going to get whipsawed almost across the board. And that's pretty much what happened. Now, I'm still bullish in heating oil, very, and the nat gas. I don't see how you can't be. You have shortages. You got cold weather coming. You had a correction. Now, you're already back to the profit objective. That's the problem. It all happened in one day, and that makes trading difficult. But that's what you wake up every morning to do. And let me give you how I wake up. I wake up at about 4 in the morning, and the first thing I do is I'll turn on financial TV, and I want to see the misery that's ahead of me. I don't know if you feel that way. I have candles that I got at Notre Dame, and sometimes on a bad day I light them, asking for help me out of this. And I'm talking the Notre Dame. But to make a long story short, I look at the markets. I want to hear the news. I want to read and see the headlines, and that's what Bloomberg can offer me. I watch for individual stocks, CNBC, and for the politics mixed with the markets, I turn to Fox. So I have 3 stations I love, and I know what I'm doing for each one. I offer a combo package that works this way. The first thing I do is I get up, I read, I write, I get myself ready for you. And in that, we're going to start with the futures. I typically start recording 5:30 to 5:40 a.m. Central Time. I'm going to give you the news of the day, what's happening in Asia, what's happening in Europe, are we seeing inflation, non-inflation numbers, and I'm going to cover over 40 charts with these. A lot of detail, a lot of buy here, sell there, do this. Not what I think the pros are doing, what I think you're doing, and they are different things than that. Okay, so now I've got that. At 9 o'clock, I go into the ETFs. Why 9 o'clock? I know the market opens at 8:30 a.m. Central Time. I wait that half hour. Do you want to know why? I want all the reports that can come out to come out. Now, if they've all come out, I'll start recording earlier. But typically, you get a lot of them that come out at 9 o'clock Chicago time. Now, I've already given you the futures. We know that the ETFs count on that, and if the reports have come out to change it, that's where I'm making the changes for you and telling you what to do. So I'm covering spiders, ETFs, and individual stocks, Apple, Microsoft, Tesla, ARK. I cover an awful lot there for you. So if this sounds of interest, it's 48 videos a month. And on the bottom of each video, if you're on our website, you pull until you're in the section you want to be. You don't have to watch the whole thing. It lights up and it tells you, oh, you're in the stock section. Oh, you're in the interest rate, the energy section. That's how you work it. During the week, 10 videos, Monday through Friday, in each week, and that will be primarily the daily charts. Each Saturday or Sunday, I rotate it back and forth, but well before the market's open, I give you the weekly charts, because now we get the longer-term picture, and there's many times that's where I think the trade belongs, not on the daily. The daily's this. Sometimes you take all that noise out on the weekly, the longer term. Give yourself a try with it. $16.90. It's not going to break the bank. You're not signing up for a year. You can stop whenever you want. People seem to love it. I get a lot of comments from it, and our subscription base continues to do very well. How do you get there? Go to our website under the word research. Give it a try. Have a great night.